What is up? What is up? Hope everybody is having a beautiful day today. Set that there. So, what I wanted to go over today was how the markets move, how institutional order flow works, right? So, everybody always has these, patterns that they trade on, and your retail patterns, your retail trend lines, and everything like that. But how does the market actually move? How does it, where does it, what happens in the midst of the market, right? So you guys already know, if last up candle before a down move, right? That's what we're looking for right here. And then you guys already know, last down candle before an up move. Okay, that's what we're looking at. That's where smart money plays in high energetic areas, high energetic levels. You want to get behind the moves where it looks like there was a lot of money that got behind a certain move, right? You guys want to get behind moves like that. But how do the markets actually move in in a sequence, right? So when we create accumulation like this, right? Let's say that there's this last down candle down here, right? Say we're going to start our new uptrend. Okay, so smart money will give you entries below the sideways channel before it starts to take off again, right? So once again, right here, we have maybe a last down candle that's pretty big, right? So we get accumulation. We get accumulation. After this impulsive move. The market has to correct itself, right? We got this move up here. Now smart money gives you entries, remember, on under the sideways channel in an uptrend. In an uptrend, smart money will give you entries below sideways channels, right? So we come back down again. We create a little pattern that retail so sells on, right? This head and shoulders right here, they always sell this, right? Well, let's just say we're playing on this last down candle prior to this up move right here, okay? So we're playing on this right here, right? What does smart money do? It comes and takes out either early retail that was buying. It took them out first, right? So we have this accumulation again right here. Right? So we have this accumulation that we saw. Retail probably saw a head and shoulders on this right here. Okay? That's what retail was probably looking for, right? Retail probably saw a nice head and shoulders. But we were looking at where the last impulse was right here, okay? Before this prior move to the upside, okay? So we are looking for entries, sniper entries down here while retail is selling right here, and then they get confused on why the market just shot up like that, right? So they get confused why the market comes back up, takes them all out, creates that new pattern that it does. You might see a fake out like this, right? We have that accumulation, and then what happens? Remember what happens. That last down candle that might be right here, right? This last down candle that got engulfed by where buyers were playing, right? So if I took a line right here, this would be where my play area would be, right? Most traders would, take their fibs like this, and let's just say that there's a 61.8 level right there, which it isn't because the drawing. But let's just say it is. Sometimes retail can get caught up entering off fib levels when really fib levels aren't really an entry tool. You shouldn't be using fib levels as an entry tool. You should be using fib levels as a area where price could like potentially pull back to. But just because it gets to the 61.8 fib level, you have a lot of retail that'll just enter just because of that, right? So they get smashed out, and then price goes in the direction that they originally wanted it to go, right? They were buying up here. We were buying down here, okay? We bought down here, right? So we have this area, we have this area, we have this area, and we have this area, right? What are these areas for? What's the purpose? What's the purpose of the market moving like this? Why does the market move like this, right? So they need a fake out, right? Oh, I guess I deleted all of that move right there. We'll just draw it back, right? So we got this accumulation in here and then this fake out, right? So what is the point of this? We want to take out, you want to take out traders, right? It's this fake out for the takeout, okay? Remember that. Remember that. Why do we see stop hunts like this and then just a yank like that to the upside? Well, there was a fake out to take out the early retail crowd that was just behind this whole area right here. If you guys think about it, there's probably stop losses all in this area, right? So they had to accumulate all of the orders sitting in here, okay? And they do it over and over again, right? They do it over and over again. They have to fake out to take out, right? So in the midst of all this, um, retail is getting confused on what is actually happening, and we always go by off of these Google images, head and shoulders, inverted head and shoulders right here. You guys see this right here, inverted head and shoulders. There's probably retail that we're buying right here, maybe right here. I don't know, but I know what we look for is, the last down areas prior to, strong swings or stop hunts. And then we look, to the left. You got to look to the left to get right at all times. So maybe we look for stop hunts to change a trend. Maybe we look for, fake outs and take out, retail, just accumulate retail's orders So then the banks and institutions can hedge their way back in, right? Because if you think about it, maybe banks started buying right here or right here, but they sold this on purpose to take out retail to buy, right? So they sold it to buy. So remember what we look for. We always look for that last up candle before a down move, and then we always look for the last down candle before an up move, right? So it will come back, and you'll know when you get a sniper entry because it won't last very long in that area. Okay, so when price breaks, you know, aggressively away from an area, be sure to watch so it can come back and you get that sniper entry for the fast move out again, right? So that's market flow right there. That is how institutions will yank people out, right? So see, we would have got a little like wick right here, say a candle right here, and then a wick, right? So we get wick entries in here, right? We get wick entries. I will save this. Right, for future use. But as of right now, let's hop into some charts, right? Let's hop into some charts. I want to go over just some Euro USD trades, some scenarios that we can talk about, you know. So one thing that I see already is, so if I was to look at this and think, let's say we're just starting, you know, right here, and all of this is going. If I was to look at this, you know, first off, the thing you need to find is where liquidity is, right? You need to find where liquidity is, okay? So we get this move, this strong move up right here. We get this strong move up right here, okay? Where are we looking left to find out where liquidity is? There's equal highs right here. They got taken out, okay? Got taken out. But then I want to show you guys something retail after this, right? So after this formed, all right here, you have retail that's going like this. I guess you can't do it with this tool right here, but you have retail that is looking at this like a inverted head and shoulders, right? And they'll just be looking to buy. What do I see? What do I see? I see that news use this right here to change the direction of the market, right? So we see this big up candle, okay? We see this strong up candle, right? So that's what we want. That's where our point of interest can be at, okay? That's where our point of interest can be at. This strong up candle prior to this down move, okay? So now we're just waiting. We let all of this play out. But as price goes on and tells us a story, you don't just want to you don't want to just let money off the table. You want to follow in line with how institutions are trading. Okay, so remember what we just talked about, like in an uptrend, smart money will give you money below the sideways channels. In a downtrend, smart money will give you entries above the sideways channels, right? So we see this, we're coming down here, okay? We come in, you see this little pullback right here. You guys see this little pullback right here, okay? Right? So look, I want to find the last up candle prior to this, prior to this start. We know this is a downtrend now because smart money bought it up to bring it down, right? So look, watch this. I want to take this and find that last up candle prior to the down moves, okay? I want to find that last up candle prior to the down move, right? Excuse me, sorry, I had to answer a text. But so what I'm looking at right here, look, there's equal highs. There's equal highs right here, okay? So maybe retail was selling right here, okay? Look, this is an interesting area as well right here, because if I go down to the 15-minute time frame, and guys, when you get your zones, you want to go to lower time frames for those sniper entries. What is wrong? I'm on Oanda. Let's go. Let's go to. Let me see. Hold on. I can do it on the 1 hour. So look, right here, that black line was our 4 hour, right? So now we just get our 1 hour. Let's go. Let's go to a different chart. Okay. So what did we have, guys? Remember, what did we have? Okay. So we had that last up candle. Go to 4 hour. Remember, we had that last up candle before that down, before this down move. We had this strong buy before this down move, okay? So we already know that smart money got behind this area right here, all right? So now we're in a downtrend, all right? So we see all of this. We see this last up candle right here. We see this last up candle right here, okay? But let's just say we don't see all of this yet, right? We don't see all of this. Let's say we missed this. Now watch, I'm gonna go to the 15-minute, and since we see that last up candle, where are my charts? I guess I can't go back that far on the 15-minute. I don't know why. But so here's that black line for the 4 hour, right? So if I take this up now and if I take this and I just refine it, I put it right here, right? So we wait, we see all of this go down because, you know, it's not valid enough for us to, oh, for us to just hop in and invest our money off of this right here, right? So we want to see where smart money uh, is taking the price. Okay, so look at this. We'll go back to the 4 hour, and now watch. So we see this down candle. You know, there's a down candle, up move, strong aggressive candle to the downside. There's a strong aggressive candle right here to the downside. What is that telling me? Well, you guys, the banks will leave trails behind, right? So what is this candle telling me in a story? Well, first off, I see equal lows right here where retail probably bought off of equal lows. They probably see, you know, the good old retail, you know, double bottom right there. You know, you guys can see that clearly. They probably bought down in here. What happened? Smart money yanked the price down. They yanked the price down, okay? Now, what do we look for? This down move right here, right? This whole down move right here. What do we look for after, you know, after this move up? We look for the last down candle, okay? The last down candle was right here. The last down candle was right here, right? So if I take a line and I put this across all the way, right, on the last down candle prior to this up move, you guys can see that we have a sniper entry right here, okay? That would have been our focus point, our area of interest of where we would want to take the trade. Even if I threw a Fibonacci level right here, you guys know the magic numbers on fibs is 61, 61, 62, and then a 71.8 fib level, right? That lands on it beautifully, okay? So we have an entry right here to bring price back up, right? We have an entry right here to bring price back to the upside. Market even came down right here and gave you another entry, okay? Gave you even another entry right here. Maybe it did this because retail got in as well right here, okay? And maybe retail started putting their stop losses in profit or you know, at break even. Market got yanked to the downside right here, and then you guys can tell just by looking at these candles, a lot of money got behind this move right here, right? So what does that let us do? Where's the last down candle before that up move, right? Where's the last down candle before that up move? Right here, okay? So it just goes over and over and over again, okay? So we do this, last down candle, we put it right there. Look at where our entry is, right? So in this wick, right? That's where our entry would be, okay? Also another thing you guys got to see is where liquidity could be at all times, right? At all times. So we created equal highs right here. We created a triple top, right? We created this triple top. We probably had retail that bought at the 61.8 right here, and then they probably sold at this triple top right here. You guys see this triple top right here. So retail was probably selling right here, feeling really happy about themselves in this one aggressive candle down, not knowing that, you know, it was just capturing liquidity on the downside while creating a triple top to take out later, right? They did that to take it out later. Okay, so you guys got to think there's liquidity always on both sides of the market. Somebody is always selling when you're buying, and somebody is always buying when you're selling. Remember that. Okay, so right here we have another. We could take this fib right here to this high. What's our areas of interest? Well, one, it's on the top of the last bearish candle before this bullish move, right? So if I put a fib in, or if I put a zone right there, you can see clearly that this was our sniper entry right here in this zone, right? All wick, right? So we can delete that fib, right? Now I want to see something on this right here on the 15-minute, right? So since we can get actually into the price here. So look, when I go to the 15-minute now, I can get extra entries, right? So watch this. You guys see this last down candle right here? This aggressive down candle right here, right? So if I took another arrow, I drag it across. If I drag it across right here, okay, so remember this black line is, I'll use a different color. So remember this orange one is our 15-minute, right? This 15-minute line right here, okay? So now we go back to the 4-hour. Now look at this. Look, there was barely any drawdown on this trade, okay? So we can go back to the 15-minute and maybe even refine it to where there was no drawdown, okay? So watch this. We have this candle right here. We have 50% of it down here. I'm gonna go there, 50%. We have this last down candle right here before this up move. So now, if it gets anywhere or respects that zone, that can be our extra entry. So look, right here, it didn't get down to this zone fully, but you guys would have seen it close above that 50% area, right? Okay, so now we're getting back up into that zone that we had marked off before right here, right? Now, this is where it gets interesting because um, this is where it can get interesting right here because retail is getting in on a certain area as well in this area. So watch this. So we go, we're waiting. We see that last up candle right here prior to this whole swing, right? Now what gets created right here? What gets created right here? Watch this. What gets created halfway right here? You guys see that? This head and shoulders? right? So inverted head and shoulders, as we learn as retail traders, are always supposed to go and do, you know, a little number like this, right? Not today. Okay? So why did price get yanked so hard to the downside and not go in the way of retail traders? Look right here. You guys see how there's a double top that got created, right? Right here, this double top, you guys see the M pattern that got created right here, okay? This M pattern that got created. So retail probably was selling and had their stop losses above the highs right here on equal highs, right? We don't look at equal highs and equal lows as an opportunity to trade, right? We don't look at equal highs and equal lows as an opportunity to trade, right? We look to take that liquidity. We look to capture that liquidity, right? So this is how manipulated the market is. Retail was selling right in here, got yanked out. The market purposely created a fake head and shoulders right here. Retail, I'm gonna delete this and this. Retail was probably buying extremely hard right here on the top of the right, you know, shoulder, or the bottom, I guess I should say, of this inverted head and shoulders, right? And look at how price reacted so aggressively, yanked them all out, right? They probably had stop loss above the highs. They don't know, you know, they're panicking. They don't know what is going on. They don't understand what is going on. But how can we catch this move, right? How can we catch this move? All right, so look at this. Here is what I see as the last up candle before a down move, okay, on the 4-hour. So I want to go down all the way to the 15-minute and try and really dissect what's happening. What is happening in the market right now at this area, right? Okay, so look, we see this really ugly, like, you know, consolidation. It's really ugly, right? So what I'm seeing, one, there's equal highs right here. Two, there's equal, oh, what is that? Two, there's equal highs right here that got created, right, in the market. Now remember, we don't, you know, we don't really trade in consolidation. We don't do that, okay? We wait for the market to capture liquidity and tell us a story, leave us a story behind, right? So this is what I see. There's a bunch of money sitting up here, right? Up here. There's a bunch of money, and there's a bunch of money sitting up here. What is the bank's goal at the end of the day? It's to take your money, right? So remember, this was our 4-hour orange line, okay? Here, I see this last up candle prior to this down move right here, all right? So I'm going to drag a line all the way across it right here, okay? So look, our area of interest, you see how uh, first off, you see right here that the smart money created equal lows on purpose to come up, take out equal highs, right? And this whole move came up aggressively, hit every stop loss that it could, and just barely right here, you can see it right here, it just barely went above these highs, right? It barely just went above these highs, captured the liquidity, and came back down. Now what do we see? What do we see? We see this aggressive move down, right? In this high energetic area. We see this aggressive move down on the 15-minute in this high energetic area. So what's the last up candle before that move down? Okay, is right there. So we have that sniper entry that we always look for right there. Now watch, I'll go to the 15-minute again, or the 4 hour. Now look, we would have entered because of this area over here that got captured, this liquidity that got captured, and then the 15-minute right here where that initial trend had looked like it was, gonna change, right? Where that candle that, did that thing that, it did that thing. It shot aggressively down, right? Like that, okay? So that's how we got that wick entry. Now check this out. It just keeps going and going and going, right? So we see this down move right here, right? We see this down move. What is the last up candle prior to the down move? Right here. This is higher time frame. Higher time frame, right? You guys want to use the monthly, weekly, and daily to find direction. Use the 4 hour for, finding where liquidity is, and then 15-minute time frame for those really good sniper entries, right? Those sniper entries that they're just beautiful, right? They're beautiful, right? So you guys see that blue line? I'm gonna go to the 15-minute and see where we could have got in at. All right, so here we are. Okay, check this out right here. You guys see this orange line, right? So we see that that's where this structure was on the 4 hour, okay? So this was that bottom candle on the 4 hour. This blue line right here was the bottom candle on the 4 hour, okay? And look at where it went. Gave us that nice sniper entry that we look for, and it went straight into profit. We didn't have any drawdown at all, and it went straight into profit and tanked about 50 pips, 50, 60 pips in 1 hour. 75 pips with 0 drawdown. A very good risk to reward on that one. Okay, so now we just keep it moving. We keep it moving. We keep it moving, right? So look right here. Once again, we see this little up move. We know that we're in a downtrend still right here, right? Off of this candle right here. Okay, we know that we're in that downtrend still. So what I'm looking at is this last sequence of candles going up before smart money got behind a move, right? Right there. That's where you can tell that a lot of money got behind these candles, right? You can tell. So what I'll do, like I always do, is put a line going across at the bottom of that last up candle before this down move, right? So that last up candle before this down move, we see a lot of money got behind in here. So this must be a high energetic area that we're looking for, right? So when we go, we mark that up. We know what's behind this candle. We see money behind this whole area right here. There was a lot of money that smashed below. Now look at this. Where did it take? What targets did it hit? It hit these equal lows right here, okay? It hit this liquidity from these people that were still in buys right here. Buys, right? So it hit that liquidity. It came down, captured all this liquidity, and now what are we thinking about? What are we thinking about after this liquidity got changed? Look, we're going to come back up to this last up candle prior to the down move, okay? Now, when we get up here, we can go down, we can drop down to the 15-minute when the time is ready, right? So we're watching, you know, we look at that last up candle before the down move, but we also don't see price to the right yet, you know? So we have to refine. We have to refine our entries, right? So let me put a line on this last up candle. You see this aggressive move down right here, right? So I'm going to put a line, which will be this blue one, going across, okay? So we'll go back to the 4 hour. Now you see where that was? Right here in this wick. Now if I go to the right, that just gave us you know, 2 entries really that we could have taken, because this 4 hour one was valid enough. This 4 hour one was valid enough. So if we go back to the 15-minute for our better entries, maybe you can even use something like as such like this. This last up candle before this down move right here, right, came up, maybe could have caught a sniper entry right here, maybe, but our main goal was looking to the left to get right, right? So look now, this is where that entry would have been up here. We would have had this sniper entry as well, straight into profit. And look at where it goes, guys. Look at where it goes. It's no coincidence. Our target, we hit these targets down here, last down candle before an up move. We hit that last down candle before an up move, right? Last down candle prior to this up move, okay? So we got in right here, caught about 120 pips, and now we're looking to go and take this back up to capture liquidity, because now what we see after this move now is there's equal highs, okay? There's equal highs here now, right? So as this goes on, we see equal highs. Where do we buy at? Where do we buy at to bring it back up? Where do the institutions buy at to bring it back up? Look, this sniper entry right here, okay? What did I tell you, guys? Last down candle, the last down candle, right? Right here. It's just sitting right there staring at you, right? This last down candle prior to this upward move, right? So this down candle, up move. Where does it go? Straight back to that down candle for our entry. Okay, so here we go again, guys. Remember this line right here. Remember this. Remember. Okay, so look. So look, we see price get up here, and the way I look at this is maybe people that sold here, maybe put their stop losses in profit. People that sold here maybe put their stop losses in profit, right? So the market came back up, captured liquidity. Now you can tell right here that it shot up. They bought this to change the trend back to the downside again, right? So you see this wick entry, but look, where could we have got in at to snipe this? Okay, so look, we go right here. We're gonna go back to this candle. We're gonna go back to this area right here. Okay, on the 15-minute chart. We're gonna go on the 15-minute chart again. All right, so look at this area. Look at this area right here. Okay, we see this last up candle right here. We see this last up candle right here prior to this strong downward move. Okay, so look at how clean this is on the 4-hour. All right, so look at that. It comes up. We see equal highs right here. We see equal highs right here. Came up, captured liquidity, aggressively came back to the downside. Now, if I took a fib level right here to from the bottom to just the middle of this candle, right? Which is another lesson that we can go over is 50% of the candle and a full 100% of these candles, right? So look, price gets engulfed on this area right here, on this candle right here. It engulfs this last 4 hours, right? It comes back up, and now if I take my fib again, like how you actually use fibs, you can see right here that we messed around, under the 6.2 area, under the 61 fib level, or 62 fib. I don't use a 61 fib level, but you guys see that we messed around under the 62 fib level. Okay, so now if we go to the 15-minute chart, you want to go to the 15-minute chart for these sniper entries, right? So look, we had this strong sequence going up, right? This is that 4-hour zone that we were looking at. This pink line was that 4-hour zone that we were looking at. Okay, so we had already got an entry up here, right? We had already got our entry up here, and now we're looking for more entries to take this back to the downside. Okay, we're taking this back to the downside, right? So right here would have been our entry. That would have been our entry, our sniper entry. Okay, off of this strong sequence of candles going up to the upside, capturing liquidity to the left. Right here, you guys see this equal highs better now on the 15-minute chart. Right here, and yanked price back to the downside. Here, right here, retail is seeing a inverted head and shoulders. They're buying this up, right? Retail traders see an inverted head and shoulders. Oh my gosh, look at it. It looks beautiful on the 15-minute, right? Not understanding what really just happened. What really just happened, they already captured liquidity over here, right? So right here, this is an obvious sell model, right? We get ready for sells after this, right? This right here. So retail sees a head and shoulder pattern and then a break, right? Retail, head and shoulder, break, retest. They think it's going to go to the moon. Not so much. Smart money yanked price back to the downside. Okay, so we go to the 4-hour and we just watch it. Okay, so now we go and we just keep doing the same thing over and over again. You see this aggressive candle to the downside. It engulfed 4, 8, 12 hours, 12 hours of candles, right? So here would be our next area of interest right here. Okay, this yellow zone now. And I'm not going to go down to the 15-minute because you guys can clearly see that this was a beautiful entry right here, right? So now we just ride this trend down. We ride this down. We entered all the way up here, 150 pips, 128 pips, and then 115 pips on that move there. Now watch this, okay? So we came back down right here again as well, captured liquidity and created captured liquidity here and then created equal lows throughout all this. So to come back and take it out later, which is actually what I think is going to happen after they take out this liquidity right here, we have potential maybe to come back down here. But let's just keep on going. So look at this right here. Let me delete some lines. Right, we had that wick entry. Right, so check out right here. This area that we had looked at in the past before, right, prior to these downward moves. Look, so we see this whole downward move right here. We see this whole downward move right here, right? This whole downtrend. What's right here, guys? This last up candle prior to this down move. Okay, so what do? We mark up the zone, right? We mark up the zone, area of interest. Okay, so after going through this whole accumulation that we were getting sniper entries in, okay, and actually I want to show you guys something down here. In these equal lows before we move on to this area up here, right? So we see that this is equal lows, obviously, right? But why not take advantage of some wick entries, okay? Where smart money has played in the past before, right? So smart money has played in the past over here. As you can see, they aggressively changed the trend, okay? So remember that. So now we get back down into this area. Which on the 4-hour, if I go back to the 4-hour again, you see that the last down candle before this move up is right here, right? So when it comes back down into this area, you don't have much drawdown. You have 15, 20 pips to go for 164. That's not bad, but could we get better? Could we get a better entry? Okay, so we drop down to the 15-minute to refine ourselves, to refine what we're looking at, right? And if I see this, as a liquidity capture as well right here. Okay, if I see this as a liquidity capture, I see equal highs over here. Okay, so what are we thinking, right? We have equal highs right here where smart money got behind and yanked price down aggressively. Okay, that's what they did right here. Okay, so I think on a lower time frame, maybe the 5 minute, this could actually be a inverted head and shoulders. I'm not going to go down to 5 minute though. I don't do that. I'm just, just playing. But I see a liquidity capture right here. There's money all right here from retail, and then we yank the price down, right? So what do I see? What do I see? I see the last down candle right here, these last down candles prior to this strong aggressive move up. And yes, I wait for all of it. I patiently wait for these sniper entries to happen. Okay, so it comes up. You could have actually used this last sequence of candles right here to catch the move going down as well. So right here, see these last moves up? See how price came right here? Last up candle before this down move, last up candle before this down move. If I go to the left, right, we see that it got to our high energetic area down here, and we see a lot of money that got behind this move up here. Okay, so where would our target actually be? It would be these highs up here. Okay, in this sequence, these last candles before that up or before the down move. So right here we see equal highs as we're going. We see this liquidity capture happen. We know that, you can take a risk, but I don't do this. I don't buy or, sell off the stop hunts. I let them play out and then come back to mitigate out of that area, right? So you could have smart money bought this all the way up here, but look at from that last, you guys remember this area right here, from the left. Okay, you got to look left to get right. So we go back to the 15, or we go back to the right, and now look at where our entry is right here. You guys literally see that wick, right? Right here. Okay, you get that wick entry beautifully set, no drawdown, like zero drawdown, and we just ride this down, right? And where would our target be? Where would our target be, guys? Where smart money was playing last. Where smart money was playing last, right? Down here. Okay, don't forget that. Stay in line with the institutions and how they flow. Okay, stay in line with institutions and how they flow, right? So down here would be our target. We have our entry up here, which was beautiful. We can go look at it on the 4 hour right here. Look, right here, 50% basically of that 4 hour up candle before the down move. We caught this wick entry right here to ride this down. 0 pip drawdown for a 95 pip gain. That was good. Now we go back to the 15-minute because we see this now coming down into our area that we were looking at originally, right? Down in here. Okay, so it comes down. The last down candle before that up move. Okay, so I want to show you guys something. We see right here, equal lows. Okay, so we're going to mark up the liquidity, right? Now what's under all this liquidity? Money. Okay, money, right? How many retail traders can I induce to buy early off of this double bottom right here? How many retail traders can I get to buy off of this double bottom right here, these equal lows? How many? How much money can I take off of this, right? So we have retail traders that are buying in here. Okay, they're probably pretty happy when they see this move, and now price gets yanked to the downside at an aggressive pace, right? So retail bought here thinking this is going to go up. They see equal lows, and then they get yanked out, right? Stop losses maybe right here. Maybe if you look left, stop losses, you know, hopefully they didn't make a stop loss that big, but maybe stop losses above this or under this low right here, right? So you guys got to think about where retail is entering moves, okay? So this was our sniper entry down here, right? Off of that, we after the liquidity capture, that's where we entered because it came down. You guys see this red line, right? That's where we were looking in the first place. This last down candle, these last, you know, couple down candles before the up move, okay? So literally it comes down, we get this little wick entry again right here. You guys see how beautiful that is right there, this wick entry, and ride this up, okay? You can ride this up. Now, we'll go back to the 15-minute, excuse me, the 4-hour, okay? Now, here was the entry. Rode this up, 190 pips, right? 190 pips. But is there any other way that we can get entries as price goes up? Okay, so you got to think, how can we get entries as well as we're, you know, monitoring our trade that we're in? Okay, so here, last down candle before it got engulfed to the upside. Last down candle before it got engulfed to the upside. Right? So it's the last down candle. So we're going to look on the 15-minute to refine our entry. We're going to look on the 15-minute to refine our entry, right? So look, there is probably, first off, so many retail traders that sold right here. I can't make this stuff up, guys. We gotta follow how institutions trade, okay? So as this 4-hour zone was getting created, we see where smart money had came down. We see where smart money had came down right here and bought it back up, right? Smart money, you guys see, bought it back up. So they want to bring this up higher. Well, where can we mitigate out of this area? Look, last down candle before an up move. Okay, last down candle prior to the up move, prior to an aggressive move up. We got a liquidity capture over here, came down right here, captured all this liquidity to the left, and shot back up. It didn't stay around very long in this area, right? So look, last down candle, or even this one, look, last down candle right here, last down candle, up move, okay? So right here we see our entry Maybe we could even use this area right here as equal lows as a liquidation area to capture. It does that in this candle right here, wicks our entry and takes off. Let's see what this looks like on the 4 hour. Okay, so we're down here now. Look at this. Off this wick right here, we could have got this entry, right? And now don't forget about this area right here, guys. This last down candle before this engulfing candle right here. So we'll go back down to the 15-minute to refine more entries as we're going up in this trend. So look, retail, you know, what do retail traders say? The more bounces, the better, right? No, not better. That's actually worse for retail, but really good for us. So what is sitting right here, guys? What is sitting right here, right? Got to think about it. Think about it, right? Money. We have retail traders that are trying to sell this, gajillion top. This is 1, 2, 3, 4, 5 top, I guess. Double top right here. Double top right here. Double top right here. They're all getting wrecked, right? So smart money. Once again, smart money bought it down here. Okay? Smart money bought it down here, and so did we, right? We bought it with them. They created lows on purpose, captured liquidity. We bought here with them again. We bought here with them again. Now look, we broke structure. We broke structure, okay? I want to show you guys something here very, very important. How do most retail traders trade, right? A break and a retest. Look at look carefully at what happens in this. Okay, watch this. So we had a break of structure, a retest, and then we took off, okay? Right? That's what happened, right? Retail had a good run, okay? So they made money. They got their break, retest, and caught about a good 36 pips. Look at what happened. Look at what happened. Look at what happened right here. Okay? Look at what happened. Money got slammed down. Slammed down. They slammed the price down. Why? Retail stop losses got moved in profit right here, taking everyone down. Maybe some traders put their stop loss at break even right here, and look, just barely went below the lows. Barely went below the lows right here. You guys see that? Barely went below these lows, bounced perfectly off of this area right here, which I guarantee you, this was that last, remember, this was that yellow line. This was that last down candle before the up move on the 4 hour. So it's not even that retail was wrong on this. They just bought early and got taken out. And look at where the price went in the direction they actually wanted. So they're sitting here catching 30 pips and then got taken out while we continued to ride this up for 166 pips, right? For 166 pips. Now look, it comes back up here. This will be my last example. I hope you guys are getting some fire nuggets and learning a lot about how institutions trade, how institutions flow and manipulate the market. Get a drink of water here. Yeah, so I hope you guys are starting to back test. You can back test like this, and you know, just start training your eyes to think about where you can take money instead of how do I put it? Instead of trying to figure out where you can make money, figure out areas of where you can take people's money, right? I don't know if that, rings any bells, but it definitely helps me because I don't look for retail ways of trading, right? I'm not trying to make money with the retail crowd, if that makes sense. I'm trying to take their money, okay? So back to I'm gonna go over this last example, really what we started out this whole call with, right? We started out this whole call with this. We started out this whole webinar with this area up here, right? We're finally getting back to it, okay? We're finally getting back to this area up here. Remember that last sequence of up candles, right, before the down move, okay? So look, we have this area right here, and then if you refine it, we have this candle of interest up here, right? We have this candle of interest up here, right? So maybe we can get, an entry up here and an entry down here. So look, you got to look left to get right, right? Let me refine this because it's a little over right there. Beautiful, beautiful. All right. So look, right here and right here are two areas of our focus. Okay, so it comes over, we come over, and now look, I don't even need to really say much anymore. Like sniper entry, okay? There's a sniper entry for us right here. This is where we would have sold, okay? This is where we would have sold this. Now, since we got up, you see how smart money in this double top, these equal highs, guys. Look, this is so manipulated. So look, we created equal highs right here. And then smart money aggressively yanked them out, aggressively took them out right here, right? Captured liquidity, and now we're going to move on to the direction that retail traders essentially wanted to go. So retail traders were selling right here, right? Right? You guys can see their mindset, right? And then this starts slamming price to the upside, and they're confused, right? They don't know what's going on. They don't understand because they aren't looking at this area over here, right? They just see a double top sell, right? That's all they see, double top sell. They aren't looking to the left. You have to look left to get right. So we get our sniper entry here, and now look, we start a down move. We start this downward move, okay? And if you guys see this gap right here, there was a weekend. This weekend right here, there's a gap. So let's go to the 15-minute. Now watch. Okay, right here. Is this the area? This is the area right here. Okay, so watch this. Right here, I see this is technically the last candle, this last up candle, right? And this was our sniper entry right here. This was the last up candle prior to the down move. So I can put a line right there letting me know, like, hey, if there's any extra entries, we can take them, right? So right here, we caught extra entries. Got a sell right here. Maybe we got a little drawdown, 5 pips. And now look at this. Price slams down again. Where does it go? Last up candle before a down move. We get another entry right here. Snipers across the board right here and over here. Now if I go back to the 4 hour and show you what this looks like, you can tell, you can see clearly it was all wicks, all wick entries, right? And look, this was that area, this green line was that area on the 15-minute chart where the last up candle was prior to this down move, right? Last up candle prior to this down move. We caught a couple wick entries. We had 5 pip drawdown, right? We had 5 pip drawdown. What was the target? The lows right here, the lows, right? 118 pips, potential 150 pips fully, okay? Now, remember what I said over here. I'm sorry, this is my last example right here because I'm having fun with this, right? So we see that last up candle, and I'm not going to do too much of an example of it because I hope you guys are starting to understand, you know, this last up candle, right? We get, we go through this whole accumulation phase, right? We go through this whole accumulation, just, collecting money pretty much, right? Collecting orders through this whole thing right here, right? So what happens? We come back up to that last up candle before this down move, right? And if we go to the daily, you guys see that this candle right here is that last up candle on the daily. It's this last up candle, right, before the down move. So you got to refine it. You have to refine what goes on, right? So this down one, this one on the bottom, that was the daily candle, right? This is all a daily candle. So we go right here on the 4 hour chart, right here. We scroll to the right because you have to look left to get right. You see that last up candle before this down move, right? And look at what happens. Right here, we get a nice, beautiful wick entry. And I actually took this trade. I didn't hold it all the way down here. I think I caught about 50 pips or so. No, it was this low right here. So 120 pips is actually what I caught. Would have been awesome to keep holding, but at the end of the day, profits is the main goal, right? So right here, we see that equal highs got created from the last area that smart money had played, right? Equal highs got created, price came up, captured liquidity, and came back to this last up candle prior to the down move. Okay, so I'm gonna send this video in the group chat. I'll probably post it on YouTube. I mean, I just want to get the knowledge out there. I want to spread knowledge that you won't find it on Google. You can't just look up this stuff on Google, right? So I want to get, you know, I want to create snipers, you know, in the market, and have people actually seeing profits, consistent results, and also trading, a way to trade that you can have longevity in the market, right? So the main idea, is to have minimal, small losses with huge gain, right? And also, I hate drawdown in trades. I just don't like seeing red in my MT4. So the you know the the less drawdown I can get, I can also up my risk a little bit more, knowing confidently getting entries like this with zero drawdown. And you guys notice also where my entries are, right? Except this one. But you guys notice where my entries are? I'm never entering inside stuff like this, right? Or like this, okay? Always, it's always on the outside of ranges, on the top of ranges, or on the bottom of ranges, right? Where high energetic levels and money has played in the past before, right? Okay? So always, like I said at the beginning of the call, smart money will give you entries um, above or below the sideways accumulation, depending on what trend you're in, right? So yeah, but I hope you guys got a lot of nuggets, got a lot of value from this. um, I'm gonna send it in the group chat, and yeah, I hope you guys just have an amazing day. Um, and give me your thoughts, whenever you guys see this. You guys can, message me privately. Doesn't matter. You can ask questions in the group. But that is it for now. So peace out. Everybody have an amazing day.